All right, we are back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing well, man. I just got to applaud you for doing this when you're out at an event. It looks like you're in someplace sunny. Where? Oh, there's Queens Ridge. You're in Vegas, baby.
I'm in Vegas. I'm up in Summerlin. This is Queens Ridge. And this was, in the early 2000s. It was built when, Vegas thought, hey, we're going to go vertical living, high rise buildings. This was one of the successful projects. Not many of the projects were as successful. So, a beautiful building in Queens Ridge and Summerlin. So, let's
Yeah,
get into the
little
show.
fun fact: Olivia and I actually looked at that when we were shopping around. We knew that Vegas perhaps wouldn't be a permanent home, so we actually walked a couple of units in Queens Ridge, and wow, some of those units are pricey.
It's a beautiful building. Absolutely beautiful. And beautiful location, Summerlin. So, I love it. Let's get right into the show. So this is for March the 1st, 2024. Let's get right into it. So this week, tell me what your thoughts are. PCE, explain for a new viewer, what is it and what happened this week?
Yeah, so we get three inflation readings a month that usually kicks off with CPI, Consumer Price Index, quickly followed by PPI, Producer Price Index. But the one that is most important is PCE, Personal Consumption Expenditures. It's what really consumers spend on a daily basis for goods and services. And why is it the most important? Fed told us it was. So we're going to take the Fed at their word. And specifically, what we're most interested in is PCE core. So we got that reading Thursday morning. The headline reading was expected to come in at 2.4. It came in at 2.4. PCE core, again, the most important of all the readings. Last month was 2.9. It was expected to be 2.8, and it came in at 2.8. There was a lot of concern that PCE core would spike to the upside. It might even break trend because of the hot CPI and PPI readings from earlier in the month. Thankfully, it did not. It came in as expected. So the trend is lower. That trend continues. But yeah, inflation's still here, right? It's still higher than, the 2% average expected. So yeah, still trending lower, but more work to do.
More work to do. Probably good, though, in that it hit what was expected, right? So hitting the expected
Yeah.
number, the 2.8, that is actually, that we'd consider that good news, right?
I would, yeah. I mean, if it would have come in at 2.9, it was flat, or heaven forbid, would have spiked higher to 3, it would have been an ugly morning on Thursday, and probably follow through to this morning. But thankfully, again, the trend is still intact, although not as, the curve is not as steep. It just went down a tenth. But yeah, I would call it good news.
Interesting. We're going to talk more about it toward the end of the show about the average 2%. We're going to come back to that. Let's continue, though. Tech earnings. What happened this week and your thoughts about tech earnings this week?
Yeah, if you go back and watch my channel for the last year or so, I've been highlighting a particular stock, Palo Alto Networks, is kind of the leading indicator. Not because I own Palo Alto, and I don't, I never will, but I used to sell software, and for the last 4 or 5 years, I sold security software. And what I have learned is that security software, specifically cybersecurity software, is the last item cut in a budget. And if cybersecurity companies are reducing expectations, my thesis was that's a problem for the rest of software. So lo and behold, Palo Alto Networks came out, I think it was Monday, disappointing guidance, stock got whacked. I came out Monday or Tuesday morning and said, hey, be careful. There's this company called Snowflake that's, reports later in the week. If Palo Alto Networks was a problem, this one could be too. And lo and behold, Snowflake reported a weak guidance, and their stock got whacked 20%. So
Wow.
again, yeah, again, the thesis is if cybersecurity is being cut or restricted, it plays forward. So again, a thesis we put out on Monday or Tuesday proved to be true. We are seeing many companies, including Best Buy, reduce expectations. Again, talk about a consumer base that was like pull forward, right? You got your TV, you got your cameras, you got all the stuff you needed. So it certainly feels like the economy is slowing. Yeah, it certainly feels that way.
I mean, you've been calling this for a long time. You've said this, I feel like, again, even 6 months ago, 9 months ago, you talked about cybersecurity being one of the last things that a company will cut because it's so important, especially in this day and age. So, very
Absolutely.
interesting. let's continue. Let's talk about new home sales. Obviously, something we've talked a lot about in the last 18 months. What did you see this week?
Yeah, new home sales, depending on if you want to be a doomer or not, you could certainly say new home prices crashed, right? Because the median home price of new home sales crashed. I think it's down like 19% from the peak, where in reality, we're simply seeing a product mix. People are going smaller. People are buying in different locations. I want to give a shout out to Lennar. I think Lennar is the first public builder, at least that I'm aware of, that is really seems to be pivoting to smaller footprints. For example, I believe they are the builders of a 661 square foot one bedroom model in San Antonio. I believe they're the builder of a 996 square foot model in Paradise, Arizona. There's talk of them being the builder of a 1,200 square foot model in Sacramento. The whole idea here is build smaller, more units, lower price point. Net, you're going to see builders sell a lot of these. And also, you're going to see doomers talk about crashes because, Ty, I don't know if you know this, but if you sell a smaller home, it's got a smaller ticket price, but it
Yep.
doesn't mean less profit. It just means less square foot, smaller, price, and hopefully more units so that we can start solving this problem. So, new home sales, hopefully, it is my hope that the average falls. It fell 3% in 2023, meaning square foot. The average home is 3% smaller. My hope is it falls 5, 6, 7% in 2024, because one of the answers has to be smaller homes. That's the only way, or one of the ways that we can contribute to improving affordability is smaller homes.
Makes perfect sense. And it's interesting when I think of new home sales over the last 15 plus years, it's always been these like larger kind of upgrade, mid-level or even like luxury type properties. So that's really good news, actually. That's awesome.
I hope it's right now. It's a couple of data points. I really hope it becomes a trend. I hope other builders, both public builders and local builders, see what Lennar is doing, see how fast they're selling, see how much profit they're making, and we just go ham and we build smaller homes because that has to be part of the answer.
100%. 100% agree. So let's continue. Let's talk about Case Shiller. For those that don't know, I know people following the show, they know, but what is Case Shiller and what happened this week?
Case Shiller is something that Robert Shiller and his partner, I forget his first name, I think it was Stephen Case, I think. They produced a 20, they basically produced a model to follow home prices. And it is a unique in that it looks at specific houses versus actual sales. It looks like a unique house. And it's a unique model. It is a little dated. The numbers we got this week were for December. So what we got this week is the finish to 2023. It came in at the last week of February. So it's not to me really a tell of what the market is doing today, but it is an excellent historical indicator that we will look back for years to come. And net, as I recall, median home price was up 5% in 2023. Certainly not a crash, certainly not doom, like all of the crash bros have been calling for year after year, up 5% in 2023.
Interesting. And I know a guy that actually has been pretty good at calling these markets. I think that's pretty in line with what you said at the
Yeah.
end of 22, beginning of 23, as you said, very moderate,
Mm-hmm.
slow growth, but we would actually see a net appreciation. So
Yep.
there you go, folks. There you
There
go.
you go.
Let's continue. Consumer confidence. Talk about what did you see this week?
Yeah, that's one we got to watch. And I think, both the numbers came out. They basically reversed trend. The consumer is getting more and more confident. That reversed this month. But what was most interesting to me, Ty, was consumers went from being most concerned about inflation to now being most concerned about unemployment, the job market. That mental shift is important because it could change consumer behavior. If you're worried about inflation, you're probably still spending, right? Because you want to buy before something goes up. If you're worried about your job, you'd stop shopping at Best Buy, like we just saw in Best Buy's earnings. So that subtle twist in consumer confidence is very, very important. And I don't think most people caught it. I think the fact that the consumer is most concerned about their job in and above inflation is game changing.
Yeah.
And I don't think most people caught it.
Very interesting. Again, consumers slowing down, and a lot of people aren't necessarily catching it.
Hmm.
Interesting. Very interesting. Well, let's continue and let's wrap up. And I've got one. We're going to talk about pending home sales. What did you see this week? And then I want to go back to something we talked about in the very beginning, in terms of like the 2%, inflation. But what happened with pending home sales? What did you see this week?
Well, we've got further validation that rates matter, right? We saw in January a huge spike in pending home sales when the rate was roughly 6.5. Rates
Okay.
now about 7.1, 7.2, something like that. And pending home sales crashed. It ran into a brick wall. We now know with some certainty that 7% is bad, meaning it squashes demand,
Yep.
and sub 7% is good.
Yep.
Right. So for the numbers, last month it was up 5.7, this month down 4.9. So about a 10% swing with just a half a point move in rates. The consumer is telling us loudly 7 bad, 6 good. So it is my hope, and this is going to hurt a real estate audience. It probably, if you're in the real estate business or lending or title, this next statement might sting a little, but it's still what I believe. I hope rates stay at 7% for 3, 4, 5, 6 months, because we got to fix the housing market long term. And if we go to 6.5% in March, that doesn't fix it. We just bring all of this marginal demand onto the market during the spring selling season, and stuff gets wacky. I was talking to real estate agents in January, and they're like, "Oh my God, 15 offers. People are waiving, EMDs. They've got escalation clauses." I'm like, guys, this is not healthy. We don't want to be here. So I unfortunately hope rates stay above 7 for several months, if not all year. But yeah, that's what I hope.
Interesting. And then something we talked about, if we see that spike, if we see rates drop down into the mid sixes, we get a wacky marginal spike. Do you think that creates a little bubble, or just do you think inventory,
Yeah.
does it loosen up inventory at all, or probably not?
I mean, it certainly released some at the margins if we're just talking about the margin. I don't think you unleash meaningful supply unless rates had a 4 on it, like 4.9. I could
Yeah.
be wrong, but my personal opinion is something in the 4s to really, really unlock supply. I don't think 6.5 does it. We didn't see it. We were at 6.5 a month ago, and I don't think we saw meaningful supply come back. We saw some, but
Okay.
not meaningful.
Interesting. Interesting. Let's go back to something too. The average, the uneducated, very educated economist, one of the guys
Yeah.
you do a show with, he talked about 2% average. I want you to just talk about that. When do you think, we're 2.8, 2.9,
Yeah.
we're just sub 3. When, how does this play out over the next 3 to 6 months?
That's the beauty of the black magic of the Fed. And frankly, shout out to the uneducated economist for pointing this out. I had not connected the dots, but he was absolutely right. The fact is, today, if you can extend the period long enough, you can actually get to 2% inflation. You just have to go back years and years and years. Because one of the things the Fed has done when they dropped this, we're going to abandon the 2% number and go for a 2% average. They didn't give us the formula, and they didn't give us the time frame, which is black magic, if you
Yep.
will.
Yep.
And in my mind, I think we get to something that feels like 2% average inflation perhaps later this year. It is a concern of mine. This is a concern that if the Fed cuts too early, we could reignite inflation and we could repeat what happened in the 80s. The 80s was ugly because we went from recession to rate cut to another recession because the
Yeah.
Fed and Volcker had to, yank the market with 18%. I don't want to get there. I certainly don't want to get there when we have $35 trillion in national debt or whatever it is. That would be horrible. So I
Yeah.
hope they keep rates higher longer.
Higher for longer, folks. Higher for longer. Okay. Michael, thank you for all that you do. Folks, if you're watching this, I hope that if you're this far in, you see tremendous value in what Michael does. Please subscribe to the channel. Michael, is there anything promotional that you want to talk about, or anything coming up that you think the audience should know about?
No, I guess the one thing I am doing, I have a course called How to Get Started One Rental at a Time at $3.99. If you buy the course, in the next day or so. I was really doing it for February, but given this is now posting March 1st, I'll do it for the first week of March. I will give you the Las Vegas recording for free. So you spend 400, I will give you 200 in additional value for free. So I hope you enjoy it.
I love it. Michael, thank you for all that you do. Have a wonderful weekend, brother. Thank you so
All
much.
right, take care. Bye.
Take care. Bye-bye. And I don't know how to stop recording. This is good. It's so funny. Here, let me see. I'm doing it on my phone and they changed it a little bit. There.